Good morning and welcome to everyone. I have the privilege and honor to introduce today Tamara Smith, our guest speaker. Tamara is currently the Executive Director of the Digital Euro Association. She has great experience as speaker, researcher, and in the financial private sector. She's a physicist, specialized in financial engineering, capital markets, and derivatives. Her work focuses mostly on fintech, startups, innovation, digital currencies, and blockchain. Today, Tamara will guide us through some of the main points of the recently published documents by the Digital Euro Association. This think tank specialized in central bank digital currencies, stablecoins, crypto assets, and other forms of digital money focuses the research in private and public digital era. I will give a small review on the three documents Tamara will be talking about. The first one, ahead of the digital euro, derives in several recommendations from the public digital euro working group. These recommendations are provided in three dimensions: design options, how digital euro would fit into the current payment landscape, and legal considerations. A stablecoin document which sets out how stablecoins would interact with CBDCs and conclude with recommendations aimed at policymakers involved in the European Union crypto and stablecoin regulation. And finally, a CBDC manifesto with 5 main recommendations on the design of a retail CBDC. It's a pleasure to have you with us, Tamara. Welcome, and the floor is all yours.
Thank you so much, Miguel, for having me. It's a pleasure to participate in such an important event. I'd like to start with a short introduction about the Digital Euro Association. As you mentioned, we are a think tank focused on digital money, the public and the private. So CBDC, stablecoins, crypto assets. And our mission is to be an independent voice of society, committed to advancing important values like freedom, privacy, and transparent governance in this digital money field. So I invite you that our audience to visit our site. We have different kinds of initiatives. So we do research and education. We also have a strong community, more than 700 individuals and companies, and collaborations. So we partner with traditional companies, but also innovative ones, central banks, because we believe that it's really important to have this diversity to build something that will work in the future. Here you can see, just to put some images that you just mentioned, our 2 white papers that we just released this August. One focus on the private and other on the public. And I'd like to add that we also have podcast episodes based on these 2 works. So you can find this in our website, and the CBDC manifesto we also have available in our homepage, and there is a podcast episode, and yeah. So I'd like to start talking about the transition from Web 2 to Web 3, right? We know that it took almost 10 years from Web 1 to Web 2, and now we are in the beginning of this new transition. And it's really important that in Web 3, the public money, it's also present, right? Because people need to be this confidence that private money always can be transformed in a public money, and this can be part of this Web3 transition when not only the information, but also the values are changing in this ecosystem. And when we talk about the money, it's possible to have different kinds of classes. And here you can see that, for example, we can have public money, but also private money. You can have the digital, but the physical. You can also have a peer-to-peer money. So for instance, a stable coin, for example, it's a private money, right, with a private issue, can be changed peer-to-peer, and it can be converted in other money as well. So it's important to have this general vision, because on the other side, the public money, the CBDC, for example, it contemplates this gray area. It's a public money, but also can be different in some ways. And we have at the lower quadrant the public money that it's that everyone is discussing. This is the retail CBDC. So it's important to see that we have different kinds of money, and when we compare our current money with the new forms of money, we realize that the central bank money, the CBDC, represents the money of the institutions, right? The public money. The stable coins represent the money of the corporations, the private money. And the cryptocurrencies represent the money of the people. So we have this wide ecosystem, but it's important to understand this fundamental basis. And as this ecosystem evolving really rapidly, I brought some interesting cases that already happened this year. So when you're looking at the stablecoin field, we had this May, the Terra Luna crash, when the stablecoin lost its peg with the US dollar, and it bring a lot of discussion to this ecosystem about stablecoins, about regulation, what it's possible that people need to see behind the instrument. We also have the issue of the euro coin by Circle, which is euro denominated stable coin. So currently the market is dominated by US dollar stable coins, and this was a big milestone because it introduced other coin besides the dollar. So it was a really interesting beginning to see an euro at this position. When we turning our attention to the CBDC ecosystem, so we have more than 100 countries exploring the topic, and it means 95% of the global GDP. Are of course that the countries are in different stages of this interaction and development, but this is a massive number. And last month, the European Central Bank chose some 5 companies to start the prototyping phase of the digital euro. So we see that it's this topic, it's really evolving also in the public sector. And when we go to the crypto market, so we are facing the crypto winter, right? So the Bitcoin reached the 20,000 US dollars, same level at 2 years ago. And we have the Ethereum merger, when the consensus changed, but now is the proof of stake, and it was a proof of work, and there was this change about the consensus. So this is just to give you an idea. This is a really interesting market, and it evolves really rapidly. And of course, that it's really hard and difficult to choose the best solution when we looking for this market with so many options. So we strongly believe that the central banks need to start to identifying the problems that the CBDC should address, and of course, evaluating the CBDC as a solution, but also all the alternative solutions. And when we say comparing, we talk about make a really good analysis about this. So feasibility, suitability, costs, and also the risks, and analyze if the CBDC would be the best solution. If it is the case, of course, then it's important to keep in mind that the CBDC, it's not a stable coin, as I mentioned before. So they are two different solutions. The CBDC, it's public, and it's issued by a public institution, and the other side, the stablecoin, it's private, and it's issued for a private firm. And there are many national strategic reasons to introduce a CBDC, and I'd like to highlight, for example, the financial inclusion. We know that, of course, that this problem, there are many reasons, geographically, but also problems with the society, sometimes lack of trust in the institutions, and the CBDC can address these problems, and it can be through the design, maybe the architecture, but it's possible to handle the situation for financial inclusion, for example. And also there is a possibility to an offline solution that also can address this kind of problem. And international strategic reasons as well. So facilitating export and importing trading, geopolitical strategic instruments. And I'd like to highlight in detail the internationalization and digitalization of the money. Here we can see that we must made a lot of choices regarding the access, but also the remuneration. The storage would be an accountant-based or a token-based. About the distribution, what is the best architecture to use, and the technology would be blockchain or not, would be a traditional banking system. So it's really a lot of things that must be decided by the central bank. Here you can see that there is three possible setups for the architecture. So the first one is the indirect CBDC. So there is a bank between the central bank and the end users. And in this case, the CBDC, it's a claim on the intermediary. And this intermediary, it's also make all the onboard and handle the retail payments. At the second model, we have the direct CBDC. So in this case, there is no intermediary, and the central bank communicates directly with the end users. So in this case, the central bank will make all the onboarding and also keep the information of the end users. And the last model is the hybrid CBDC. So in this case, the central bank issued the CBDC, but the CBDC is distributed by an intermediary, but the claim, the CBDC, it's a claim on the central bank. So depends on the case of each jurisdiction. A specific architecture can be the best solution. So the central bank must to analyze all these possibilities and see what is the best for each case. And here you can have a decision tree about the technology, if it be a centralized or a distributed blockchain. So it started at the infrastructure. So who writes transactions in the ledger? If it's a central validator, so it continues. And if it's a blockchain, right, a DLT, so it's another way. And in the case of its central technology, we can have accounts or tokens, and it also happens for the case that it's a blockchain. So at the end, we have the possibility to have centralized and account or token, and decentralized also account on token. And it's also a decision that the central bank must to have and analyze which is the best solution, the best design that will solve the problem that they want to solve. As I mentioned, more than 100 countries are exploring this topic, and here you can see that there are different levels of development. We have some countries that are researching the topic, others that have pilots. We also have some launched, at least. So the Economic Forum just published that at least 10 countries have already launched or have some kind of advanced pilot regarding the CBDCs. So it's possible to stay up to date looking at this CBDC tracker. And here, I'd like to show some examples from different jurisdictions. Here is the INAIRA. This is the Nigeria CBDC. It was launched as the second CBDC launched in the world. And as you can see, it's a retail CBDC. So most part of the central banks are exploring the retail CBDC, and then I imagine that after the investigation and the implementation, then they will look at the wholesale CBDC. So for now, the retail is the focus. They're using the fabric as a technology, and the architecture is the intermediated. As I mentioned before, it's a DLT, so they use a blockchain. It's accounting, it's not token, and the partner that provide the technology is the bid. And here you can see some value propositions of these monies, of this digital money. So inclusive economy, innovation, efficiency, resilience, and proudly Nigeria. So the country have a lot of problems, social problems, and also some lack of trust in institutions. But they want to use this project to address some problems, and also to make an inclusive economy with for all citizens. The second case, it's about the ESET. This is the CBDC of Ghana. This is a pilot. It's not a launched CBDC. And here it's also a retail CBDC. The architecture is intermediated, and the partner that provides the technology, it's Giessen de Vriend. Here it's important to highlight that it's a token based in this case, and they will also have an offline solution, and this will happen with the financial inclusion. So it's a different kind of project, and each country needs to analyze and see which is the best solution for the case. Here we have the Ukraine's CBDC. It's also a pilot project, so they want to transfer in a base of a peer-to-peer, can be both anonymous and with user identification. This is a really interesting topic because a CBDC should be provide privacy, and from a technological perspective, it's possible to keep anonymous in small and medium-sized transactions. So that's why it can be anonymous for up to a limit for a transaction, and at the same time be complying with the regulations and the rules. In this case, the National Bank of Ukraine will deal with the retail individuals. So this is a direct architecture. They will communicate with the end users. And it's really interesting that it's not a profitable tool, and but of course a means of payment and not a store of value. And they use the Stella technology, and this it's a really important case, especially because the war. So people can use this kind of project, this kind of technology to as a means of payment, even in a crisis time with a lot of problems. So it's important to give people this possibility to use and to have the opportunity, of course, to use the payment system. And we have at the ECB the Digital Euro project that it's now at the investigation phase. And the idea is that this phase will during until October 2023. And then they will decide if we will start at the development phase. That can also last around 3 years. So here for the Euro zone, we are talking about 2026, 2027. But it's, of course, it's important to highlight that it's 27 countries. So they want to harmonize all the regulations and also combine all the use cases to develop something that will, of course, be useful, and it's different from the current payment systems. So this was the examples that I want to show you. And of course, please feel free to reach me out and connect me with LinkedIn, and also visit the site of the Digital Euro Association. Thank you so much, Miguel.
Thank you, Tamara. Very complete and clear presentation you gave us. It's a lot of information that you gave us right now. I guess we could conclude that CBDC is an innovation that could solve several problems, and that most of the central banks until now have been trying to understand the problem to solve in their own jurisdictions, right? And in this line of thought, and before moving to the attendees' questions, which we have already some of them coming in, I would like to warm up the Q&A part by trying to draw near to our region the results and conclusions of the work of the Digital Euro Association. And as you know, in Latin America, we have several countries that are having some social issues or crisis, as you prefer to call it, which in consequence derives in institutional crisis, including trust in central banks. And in that sense, what could be a good advice for our region in order to issue a CBDC, or at least do the process to issue a CBDC, specifically the ones that are facing institutional trust issues? I guess the process is very important. What is your view on this, Tamara? And do you have any advice in terms of architectural decisions or the process in this matter?
Mm-hmm. Yeah, that's a very important question, and for sure, the process, it's really important. So to have a transparent process, and also to include citizens in the process. So analyzing all the projects, we see that the countries that are more successful in this development usually make a lot of surveys with their citizens regarding the usability and the privacy and how this digital money would be designed, and also make a lot of public reports regarding the process. So it's a really good habit to have this reporting every time that something interesting in the research happens. So the process, and keep people really informed about it, but also the central bank can choose the best architecture that can handle this problem. So if there is lack of trust in institutions, I believe that the architecture that is directly, it's not the best option, right? Because if we have this kind of problem, so it's better to put an intermediary between the central bank and the end user, and sometimes promoting innovation in this two-tier payment system. And I think this can be achieved through maybe including new actors in the ecosystem. Maybe these intermediaries can be banks that already exist in the ecosystem, or other new actors that can be some kind of fintech, or a company that can offers this service, and also by revising rules and authorized access.
And just as a follow-up question on that, do you think that maybe DLT technology or blockchain technology in these specific cases where trust is an issue would maybe help a little bit more than traditional technologies?
Yes, I think so. But of course, it's good to be aware that we have different kinds of blockchains. And in this case, we can use a blockchain that have some kinds of permissions, right? It's decentralized technology, but you can, of course, create some kind of permissions that it's different for a really open blockchain, like the blockchain of the Bitcoin, for example. But I think the decentralized technology can help. And also, some design options that the central bank can decided about, for example, privacy. As I mentioned, for example, the central bank can make its small and medium transactions anonymous, for example. And also all the information from the end users can be stored at the intermediary and not in the central bank. So the central bank doesn't know about how can I spend my money, in what I can spend my money, but just guarantee that this process happens well and works well, and of course it's compliant with all the regulations.
Thank you. Thank you, Damara. Now we'll jump in a couple of questions we have from the attendees. We have Angel Arita from the Central Bank of Honduras. He's asking, although there are clear public policy motivations for issuing a digital euro, what factors would determine whether society adopts and use it, considering the risks you have pointed out?
Mm-hmm. Yeah, this is really interesting, because I believe that we need strong value propositions, and this will so the adoption will be driven by strong value propositions. If the central bank proposes something that it's already exists, I think this will not work, right? So I think we need some things that it's similar with cash features, for example, like privacy, offline features like cash-like. We can also think in low costs, especially for merchants. I think this will also foster the adoption. Some kind of programmability that can be that can help in some cases. For example, if you have a electrical car and you can use this kind of digital money to pay for recharge your car, so we can have this designed in a programmability using a smart contract, for example. So I think yeah, there will be some really strong value propositions and different from we already have it today. Yeah.
Thank you, Tamara. Javier Bonsa, it doesn't say from where he is, but he asks, what are the main implications of the transition from proof of work to proof of stake as a protocol for Ethereum? Will it have a significant impact on transaction costs and thus increase DeFi's reach?
Yeah, so I think the most different between the two consensus mechanisms is that before the Ethereum used the proof of work, that it's really based on energy consumption. And it's why this is really discussed in the community. And now, after the merger, the consensus changed to proof of stake, that it's not based on energy consumption. And yeah, if you looking for in Google about the energy consumption after the merge, you will see a massive difference. So the graphic, it's kind of like a almost close to a new consumption compared with the proof of work. So I think this is really the big difference. So now it's a more sustainable, right, blockchain in terms of energy, but also in terms of cost, because once you have this lower energy consumption, yeah, you have lower costs as well.
Sure, this might be important, especially for stable coins, etc. But now I was trying to think in terms of CBDC. Probably in CBDCs you will use other type of algorithms to process transactions. And what is I don't know if you have any information on that, on what is generally on the pilots you have shown, or even the CBDs that have gone live. What do they generally use? Do they use a proof of authority or some other type of algorithm that helps process a little bit more transactions in terms of throughput, right? What have you seen in pilots and the current projects that are live?
Yeah, so in the projects, we can see that when they use blockchain, mostly have a kind of permission. So you don't have to have this work to approve the transactions. And some already use it, as I mentioned, for example, the Ukraine CBDC use the Stella blockchain, which use, it's not proof of work, neither proof of stake. It's another mechanism of consensus. And of course that the central banks want to keep this with lower energy consumption to be a sustainable, of course, project.
Thank you very much. We have from Venezuela, the rationale for CBDCs in developed versus developing markets is very different. Could you elaborate a little bit on that?
Yeah, so maybe the idea for a CBDC is to be, of course, is not to replace the cash, right? The money that already exists, but to be another option as a means of payment. So we know, I mentioned that we have this kind of transition to Web2 to Web3. And I think it's, this requires central bank money into the digital area, right? So digital money would preserve the role of public money as the anchor of the payments in the digital age. So people need to have this kind of confidence that private money can always be converted in central bank money. And I believe that it started with the transition for the Web3. So the idea is that the public money that it's already exists, we can use also this money in the digital form, because the money that we use it today in our digital accounts and in our sometimes credit card and this kind of stuff, it's private money, right? It's commercial bank money. It's not a public money. And as this is a private money, there is, of course, a bigger risk when you compare with a public money. So I think the idea is to adequate that the public money also can exist in the digital money and can be used and can be, of course, a mean for converted the private money in the digital age.
Okay, perfect. Fidel Jaramillo from FLAR asked, what is the status of the convertibility between CBDCs and stablecoins issued by different institutions, public or private, and in different currencies, right? How does that work?
Yeah, so sometimes people see as a competitors, right? So the public versus the private. But I think maybe we can see in some years that this kind of money will be coexist. So we have the two kinds of money at the same time. And of course, we can think in some kinds of interactions. For example, so we can use so some research talking about that you can use CBDC, for example, as a guarantee for a stable coin. So we can have this kind of interactions between the private and the public. And I think, of course, they can address different use cases, right? Because it's private, so there is a kind of risk, and another it's public, and it's for other uses. So I think they can coexist in the future.
And I would like to delve a little bit in on this stable coin and CBDC thing. There's something in between that there has been one or two think papers from the BIS. I remember reading about the synthetic CBDC. However, I've only seen theoretical work. I don't know if any of the pilots, or have you known anyone that is really studying that as a possible alternative or solution, or at least to test it in real life. Have you heard something related to the synthetic CBDC?
Yeah, I have the same experience. I think it's much more theoretical. Yeah, up to now, but yeah, maybe I don't know, maybe it will be inside of some investigation phase in some country, but yeah, I'm also read but just theoretical. Yeah.
Okay, thank you. And we have from Antonio Obando, Bolivia. He says how CBDCs would or could help to manage AML CFT risks.
So when using, of course, the blockchain technology, we know that all the data, we have more transparency. So we have really database that can be changed. So I think the transparency, of course, can help. And we can design the CBDC to be compliant with some with the regulators that we already have. And of course, it depends on the architecture that I show you. But I think maybe most countries will choose the hybrid architecture when the CBDC is issued by the central bank, and the commercial bank will offer this service and make the onboard and make all the checks with the regulation, AML, CFT. And I think, of course, that the technology and the design options can be a good help, yeah, for these compliance issues.
And now that you mentioned the hybrid model, and thinking a little bit between the direct, indirect, and hybrid, and specifically the KYC that is related with the question before, and I guess the direct model is kind of challenging for central banks, right? Because in that case, they will need to handle the KYC and all what we already know about cybersecurity issues, et cetera, et cetera. So how do you see that model specifically in terms of the challenge that central banks will face, and something that historically they have not done, right?
Do you mean in the case that
doing KYC, that they directly issue the CBDC?
Yeah, I think this is a challenge. Yeah, because as you mentioned, yeah, it's they will accumulate a lot of work that currently is done by the commercial banks. But I think there is a really big problem, because if the central banks make this work, so the commercial banks is, it's the central banks need to keep the ecosystem and keep the commercial banks into this ecosystem. So in this case, each agent in the market can participate in this new financial market. So I think the biggest problem is that if the central bank make these activities, maybe there is no activities for the commercial bank, so they will need to looking for new business model and new activities, and this maybe could be a not comfortable situation for the market. So I think the most architecture that the central banks will choose for sure is the hybrid.
Thank you, Tamara. And we have a couple of questions in the same line from Spain and from Ernest Fasol of Buenos Aires. Both are kind of trying to ask if central banks have a risk right now due to entering late into the game and losing control of their economies, right, and their monetary autonomy, and either could be cryptocurrencies, maybe stable coins, or even maybe other central bank digital currencies, right, that could threaten maybe their monetary autonomy. So do you think most of central banks are a little bit too late to have do you think they have a great risk right now on that matter?
Yeah, maybe some. If we compare with the global overview, yeah, we have more than 100 central banks exploring the topic, but of course in different phases. Yeah, but I think we already have some projects that were launched. So I think this some central banks need to start this process, at least the analysis process, right? To see the problem and analysis if the CBDC could be the best solution. But I think this is also a discussion that can happen in a global way, right? Because when we're thinking in CBDCs and in means of payment, we also think in interoperability. And this kind of digital money need to work globally, right? And one of the futures that the central bank are looking and researching is this kind of interoperability in their country, but also in a global level. So I think, yeah, at the point of the future, I think this will be a global discussion because the digital money need to work in other jurisdictions, right?
Right. And there's one topic I've always found interesting to discuss when we are talking about CBDC, and it's digital identity, right? I think digital identity is an enabler in some form of the adoption of CBDC, or at least helps to solve some issues maybe in the KYC or in other areas. So what do you think would be a good, let's say, process? Do you think digital identity should be something that is discussed before or maybe at the same time, or you just think digital identity is a separate issue from the discussion of a CBDC?
Yeah, good question. So I think in some cases, this is a separated discussion because I think this identification issues in general are they have more topics to be discussed in regarding the law and the regulation, and also need to include the citizens in the discussion. So I think this discussion it's much more difficult in terms of looking for law and regulation. That I think that the countries make this in separated ways. So we have countries that are discussing, of course, these identity issues, but yeah, I don't see this kind of discussion as a joint discussion. Yeah.
Thank you, Tamara. We have a couple of questions from Daniel Risk from FLAT. I'll give you the first one, then we'll jump to the second one. Do you foresee a change in the world reserve currency status quo resulting from widespread adoption of CBDCs?
Sorry, can you please repeat?
Yeah. Do you foresee a change in the world reserve currency status quo resulting from a widespread adoption of CBDCs?
Tough one. Yeah, I don't know. Yeah, I imagine that, of course, some countries will not adopt a CBDC as the best solution for their problems. But yeah, but I think many will be, because there are many benefits, right? Not only for the public side, but also for the citizens and the society as well. So I don't know. I think, yeah, I think maybe we have this mixed solutions. I really don't know.
And the follow-up question from Daniel, I guess we kind of touched a little bit on this. He says, are secondary currencies bound to disappear or lose relevance as they are crowded out by larger, more liquid and available other CBDCs, right? But I would add a little bit to that question, and maybe that is part also of the design of the CBDCs, because you can have the CBDC only used by citizens in your country, or I guess you can cover some of those rules. So it's not just the CBDC that it's out there for everyone to buy, and you can somehow dollarize or whatever other currency you have in digital version, right? So you can put some of those restrictions in the architecture of the CBDC, right?
Yes. So it depends on the design that the central bank, will design. As I showed, for example, the ENIDA and the ESED are different projects. And some countries are developing CBDCs that already can be accessed by other countries. So it really depends on the design that it's proposed. So at least the ENIDA, for example, you can use the CBDC. They have an application and you can make the download. So I think it depends on the designer choices, and and can be different for each country.
We have a question from Costa Rica. What is the right way to design a CBDC to ensure that financial stability is not jeopardized, as the traditional banking system is disintermediated? It's kind of a difficult question. It's a very, I guess, kind of the core of the question of CBDCs, right?
Yeah, it's really difficult. Maybe we can start saying that, of course, the CBDC needs to follow the principle of do not harm the society, for example. So with using, for example, negative interest rates, or expiring after a time, or maybe the programmability that I mentioned. For example, if the programmability can allow use the digital money, use the money for particular expenditures like special beverages, special foods, video games, this kind of stuff. Yeah, I think we can start with this do not harm the society principle. I think it's a good start. Yeah.
Well, time flew by. I'd like to thank our speaker today, Tamara, and all the questions we received from the attendees. We encourage to discuss these questions and others that you might have during the conference that will be sustained during next week. So discuss this with other central bank colleagues. You have the opportunity to do this face to face. And thank you, Tamara, once again. It was a pleasure having you with us. Thanks to everyone, and of course to Vlad for the organization of this session. See you soon and stay safe, Tamara.
Thank you so much for the invitation, and please feel free to reach me out and to connect with me. Thank you.